Complexity and fragmentation of GAAP. GAAP has grown over decades through piecemeal additions and industry-specific adjustments, leading to thousands of pages of guidance under ASC topics, redundancies and contradictions, a perception that GAAP is too technical for non-specialist small and medium-sized enterprises, SMEs. Struggling with compliance. The sheer volume of documentation often overwhelms smaller entities and introduces ambiguity in interpretation. GAAP versus IFRS, the convergence debate. One of the longest-running debates in accounting policy is whether GAAP and IFRS should be unified into a single global standard. GAAP IFRS rule-based, detailed, principle-based, judgment, US only used in 140-plus countries, developed by FASB, developed by IASB. Challenges: cultural and legal differences, political resistance, cost of transition for US firms. While partial convergence has occurred, e.g., revenue recognition, full convergence remains elusive. Slow adaptation to new business models. GAAP has struggled to address digital assets, e.g., cryptocurrency, currently treated as intangible assets, subscription economy, revenue recognition challenges, gig economy and contingent labor, unclear liability treatment, platform business models, issues with revenue sharing and user-generated content. In many cases, accounting policy lags behind innovation, leaving gaps and inconsistencies in reporting. Sustainability, ESG, and non-financial reporting. Stakeholders increasingly demand more than numbers. Investors want to know a company's carbon footprint, diversity policies, and ethical practices. Yet, GAAP offers little guidance on climate risk disclosures, human capital reporting, environmental liabilities, governance practices. Global Response, SASB, GRI, and TCFD have issued voluntary frameworks. SEC and FASB exploring ESG disclosure mandates. Future GAAP may incorporate or coexist with mandatory ESG frameworks to provide holistic performance insights. Technological disruption and digital reporting. Key disruptions: blockchain, immutable records, real-time audits, smart contracts, AI and automation, real-time financial analysis, fraud detection, XBRL, machine-readable financials for instant benchmarking, cloud-based ERPs, seamless GAAP compliance across global operations. Auditors and accountants must upskill or risk obsolescence in the face of automation. Accounting for cryptocurrencies and digital assets. GAAP currently lacks a dedicated standard for crypto assets. Current treatment: classified as indefinite-lived intangible assets, impairment losses recognized, upward revaluations not permitted, transactions recognized at fair value with high volatility risk problems, does not reflect economic reality of market prices, hinders balance sheet relevance for firms with crypto exposure. FASB is considering proposals to treat crypto as financial assets or inventories. Lack of real-time reporting and transparency. Today's GAAP system is rooted in periodic reporting, quarterly, annual, which often fails to capture rapid financial shifts, provide timely insights in volatile environments, prevent reactive decision-making. Future GAAP may move toward continuous auditing and real-time financial dashboards. Calls for reform and simplification. Current reform proposals include Private Company Council, PCC, simplified GAAP for private firms, codification, streamlining, removing outdated or overlapping provisions, integrated reporting models, combining financial and non-financial KPIs, stakeholder capitalism metrics, reporting for broader impact beyond profit. The goal is to make GAAP more usable, flexible, and forward-looking. The future of GAAP. Scenarios for the future. Partial convergence with IFRS continues via joint projects, hybrid standards incorporating both financial and sustainability metrics, tech-integrated GAAP with real-time automation and smart disclosures, global standards body emergence, perhaps a GAAP 2.0 or unified global reporting framework.